Hello and welcome everyone to Gold Asset of the Day for the 9th of June 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? In the latest week, we've seen hedge funds and money managers, they've increased their net long positions with silver, but they've reduced their net long positions with gold. And I mentioned this last week that you wanted to be very nimble in locking in your profits ahead of the European Central Bank announcement and ahead of Friday's non-farm payrolls. In fact, we banked 970 points just last week, which we discussed with you on Silver Asset of the Day, on gold ahead of the European Central Bank announcement, and again banked 270 points before non-farm payrolls. Now, we mentioned this in detail as well on our week ahead commodity report, where we had established another long position on gold after Friday's non-farm payroll, which saw over a 450 point drop in the price of gold, which presented a perfect opportunity to buy that dip. So I hope many of you capitalized on that. In fact, by the comments that we got on the week ahead commodity report, many of you were able to capitalize on that sell-off, and you've been buying in at under 1,680 US dollars per ounce. We've just seen a breakout, in fact, this afternoon, with gold breaking out above 1,717 US dollars per ounce, which has actually banked us 300 points now on our new position that we executed on gold just on Friday. And now we have another major news item this week, which is going to be Wednesday's FOMC statement, which again can be a major catalyst for both gold and silver. So with that, what do you need to be aware of at the moment? Well, again, right now, you want to be very mindful of the cycles that we see in the market, both day to day and week to week. So now we're heading into the second week of June. Normally, between now and the end of the month, we see either range-bound price action or upside on gold. We've already had a fairly sizable flush out last week on the Friday off the back of non-farm payroll, but this was to be anticipated potential profit taking in the lead up to the European Central Bank and also Friday's non-farm payroll. And again, this is where using pure 100% technical analysis is not going to help you or give you any sort of an edge in the market. Either you're going to miss out on big trade opportunities, or very simply, you're getting chopped up in the market too much. So you want to be taking advantage of the cycles that we see day to day, week to week in the market, seasonality, what the hedge funds are doing, what we're seeing from the money managers in the markets right now, and also be aware of where the key magnetic levels sit, where the key liquidity areas are, where you want to be buying on those big sell-offs. They provide such great opportunities, even from Friday's non-farm payroll. The price there that we had below 1,700 for the best part of the whole afternoon and also on Monday as well, that provided a fantastic opportunity for you to generate over 300 points, in fact, even more than that, now that we're seeing gold break out just on Tuesday. We also mentioned this in detail on the week ahead commodity report. Often if you have a big sell-off on Friday on the non-farm payroll data, gold will retrace on the Monday. It won't follow the usual counter flow. So again, if you get a big sell-off on Friday's non-farm payroll, gold can often have a breakout and a significant retracement on the Monday to make up for the sell-off on the Friday. And that provides a great trade opportunity as well. With respect to the gold-silver ratio, we are actually seeing the gold-silver ratio climb to the upside this week, which suggests that gold is going to outperform silver. We saw the same thing happen this time last year in June, where gold was able to outperform silver, and therefore we want to be strategically more positioned on the long side than gold, than silver just in the short term. You have to remember, silver prices went up by over 25% over the month of May, providing some fantastic trading opportunities. But now we're seeing the focus switch back to gold, which is providing just fantastic day-to-day volatility. So if you're not making money on gold at the moment, you absolutely should be, because these sort of range-bound moves that we're seeing right now, week to week and day to day, they're providing some really fantastic opportunities to profit fast. And of course, trading, as you know, is recession proof. And right now, as we see many banks around the world either going to zero interest rates or negative interest rates, this is the perfect time for you to take control of your finances, control of your wealth. Make sure that your capital is working hard for you. You've worked hard for your money, and now you want to make sure that your capital is now working hard for you, that it's compounding, and that you're utilizing a research-driven approach to the markets, which will give you edge. So of course, if you would like to find out more about how to become a member of the Gold and Silver Club, learn a research-driven approach to the markets, just click on the link below today's report, make an application, and we will, of course, get in touch with you ASAP. So with that, that's been Gold Asset of the Day, and of course, we wish you good trading.